Good afternoon. This is Chris Boulter, and I'm joined with my partner here, Jeff LaMotte. We're here to share a little bit about Val-Chris Investments today, our private money loan programs, and to share some of the loans we've recently originated to give you some ideas as to what we can do and how we can make you some more money in 2026. So let's get started. Let me open up our slides here. This is kind of our agenda here, tell you a little bit about ourselves, our program overview. Then Jeff will jump in and tell you about some of the loans we've recently closed, particularly on owner-occupied properties, where the money's being used primarily for business purposes. And then we'll go over the entire process and then provide you a few minutes for any questions that might come up. We'll be happy to answer those for you. Okay, a little background about Val-Chris Investments. We have been a private money lender solely since 1975. Unlike a lot of private money lenders, we actually fund these loans with our own money, and then we worry about selling the loans off after funding. All of the underwriting is done in-house. It's done primarily by myself. Jeff LaMotte also pitches in and does some of the underwriting. So Jeff and I make all the decisions. They don't need to go to a committee. And once you have that pricing, you can rely upon that. So what that means to you is you'll have one underwriter, one pricing, no committee. So you'll have pricing that you can count on. Okay. A little bit about our products here. The majority of all of our loans, they need to be used primarily for a business or investment purpose. And so what that means is that at least 51% of the loan amount needs to be used for a business or investment purpose. That primarily comes into play on refinances, because obviously on a purchase, all the money is going to be used for an investment purpose. So when I talk about the majority, that's typically on a refinance, and that means 51% needs to be used again for a business or investment purpose or paying off a business or investment related debt. Second point is we don't just do first trust deeds, first mortgages. We also do seconds, thirds, and even an occasional fourth. And there are several states we provide that to you for. We lend in 9, and I believe there's 5 of them that we lend seconds or thirds on, but we'll go over what states we can provide subordinate financing as well. Owner-occupied refinances can be done, and that's what we're going to talk about today, when the funds are being used primarily for a business or investment purpose. So it does not need to be non-owner occupied. Now on purchases, because purchases have to be used for an investment purpose, it's typically going to be a non-owner occupied property. We can make an exception when the loan is made to an LLC or a corporation. Because LLCs and corporations, by their very nature, are not consumers, if a property is being purchased in an existing LLC or corporation, we can oftentimes provide financing for that purchase situation. One of the benefits of a private money lender like us, or any true private money lender, so if you hear you need to document income, they're probably not a true private money lender, is that all of our loans are stated income and stated assets. We don't require W-2s. We don't require bank statements. We don't require tax returns. We don't require reserves. We don't have DTI requirements. We don't have DSCR requirements. We are a true stated income, stated asset lender. One of the other benefits of working with Val-Chris Investments is we have no minimum FICO score requirement. In fact, some of our borrowers have no FICOs. That commonly comes into place when we're dealing with foreign nationals, and there may be some other circumstances. So don't let a credit score or lack thereof stop you from running the transaction by us. Another great benefit is we can close on short sales and REOs immediately. I bring this up because oftentimes those are the types of transactions that need to be closed quickly. And that's what we can do. We specialize in very quick closings. What kind of products do we offer? We offer first, second, thirds, and we have even done an occasional fourth trustee. As we've listed here, we do not only purchase money loans, we also do refinances as well. If the subject property can't provide enough equity to meet our equity requirement, we can cross-collateralize by adding an additional property. So it's always good to ask your borrower if they own any other property, should that become a need, if they're looking to pull cash out of an existing property. It's not uncommon for a borrower to just share with you the subject property information But asking the question if they own anything else might become paramount if we can't get enough cash out of the existing property. Now we do one type of actual consumer purpose loan, and that's a true bridge loan. For us, a true bridge loan means that the loan purpose is specifically to buy another property. So if you got a borrower who owns their primary residence but wants to buy something else, and they were counting on the sale of their property to close on the purchase, but it hasn't closed yet, that's a true bridge loan. We may be able to get them the cash out of their existing property, and if need be, cross the property they're buying to close on that new purchase. And the fact that their existing property may be listed for sale won't be an issue for us. We can do that type of consumer purpose loan. As mentioned, we do refinances for cash out loans. That's a big part of our loan portfolio. We do loans to foreign nationals. That has become very common in the last few years. The types of properties, we're not limited by just your standard single family residence, condominium, commercial, industrial type property. We'll also look at mobile homes and manufactured homes. We may have some limitation on mobile homes as to loan to value, but manufactured homes typically are not a problem. We make loans in some other unusual circumstances. Properties that are in probate, even the borrowers who are currently in bankruptcy, we just need to get a court order allowing the borrower to take out the subject loan. As a reminder, we don't just lend on residential, we loan on commercial property, industrial property, land, and multi-unit property. How do you get paid and what to expect after submitting a loan? All of our fees are going to be disclosed on the borrower's closing statement as loan origination fees. So when Jeff and I provide you pricing, we're going to quote our fees. We don't limit what you are going to be charging as long as your fees don't exceed ours. So once we quote, you can match our fees or charge less, of course. That's never a problem. Your fees will show up as broker fees on the borrower's closing statement. You never have to guess what you're making on a deal. We put everything in writing. You can count on our pricing, and you'll see it on the estimated settlement closing statements as well. What do we typically charge? People ask. Commonly it says 1 to 3 points. Most commonly, I would say expect 2.5 to 3 points. Sometimes a little bit more on smaller transactions, and we can do loans at 1 to 1.5 points, typically structuring with a higher rate and a longer prepayment period. Typical closing time, we estimate typically 10 business days, but that clock doesn't start ticking until you get us the needed items that we request. And we've got a very, very boilerplate submission package. Once you have our submission package, you'll find it's one you can use for all of your loan transactions. It has a checklist in there, and you just provide us the items on the checklist that are relevant. It's real simple, easy to complete, and once we have those items along with the appraisal, you can anticipate a typical closing in 10 days. As the broker, you're the liaison between us and the borrower. We don't communicate with your borrower. We provide you the terms and conditions. It's your job to communicate that with your borrower, who's your client. We're just the lender. Important, we protect you as a broker. Once your loan is submitted to us, that loan is your deal. We don't allow the borrower to go around you. We don't allow the loan to be submitted by other brokers. So once we've given you the pricing and you've submitted the loan to us, you can rest assured it'll be your transaction if it's going to close. Honest and competitive pricing. We've been in business for over 50 years. One of the stables of our business is that our brokers can count on us. Not only can they count on the pricing we provide as being reliable at the time of pricing, but we believe our pricing is very competitive. In most cases, we find our pricing to be below our competitors. Certainly, when you look at the terms we provide, we do get beat occasionally on pricing, but when you look at the terms of the loan, that typically only holds up when they're providing a very short-term loan. So we provide typically longer terms and more competitive pricing. But if we're ever in a battle over pricing, let Jeff and I know, and we'll let you know if we can do any better. That can happen from time to time. Years of experience. Again, we've been around since 1975. I've been the broker here since 1986. This is all we do. So we consider ourselves an expert, primarily in California, but we've expanded into 8 other states, and we see a few more on the horizon in 2026. Okay, I'm going to let Jeff take it over from here. He's going to tell you a little bit about some of the loans we funded recently on owner-occupied properties so that we can open your eyes as to what other property transactions might work well for you and your clients.
Thank you, Chris. And Cecilia, would you mind actually going to the state reference sheet first so I can go over that before I go over to these scenarios? So I think this is good for everyone to see. I'm going to go through a few scenarios that we've funded, but this is a good little grid for you to use as a reference point when you are looking at these loans that are out of state. Um, One thing, too, if you have any questions on any of this or anything that Chris has gone over, please use the Q&A at the bottom. We'll go over the Q&A at the end of this, at the end of the webinar. But you can see in California and also Arizona and Nevada, those are the most strict licensing states. So if you are sending us a deal in one of those states, you need to be licensed in that state. The rest of those are pretty open when it comes to the deals that you're funding, assuming they meet the criteria for us doing a loan over there. The loan to values are general, depend on guidelines. However, they might change per deal depending on what type of property you're sending over. And then commercial loans in Florida must be held in an entity. So take a look at this, and if you have any questions on this, please put them in the Q&A, and then I'll go through the first scenario that we have as well. Okay, so this first one is in Linwood. It was an owner-occupied business purpose loan. A couple things to look at. So the loan amount itself is a good size, $415,000. We're in first position. It looks like the loan to value on this one was right around 62%, and it is an owner-occupied deal. The purpose of this loan was used for business purposes, as is all of our transactions. Another cool part about this one was let's see, this was a new business that they were forming. So it wasn't a business that was already established that we could find recurring revenue history, things like that. They were pulling cash out of their owner-occupied property to create a new business. So if you have clients who are looking to start a new venture, looking to start something new, they can pull cash out of their owner or non-owner occupied property to get things started on that sense. Along with this one also, their FICO was 621, so far below what most banks want to see when they're given these types of loans. And other than that, like I said, it's owner occupied. Oh, another interesting one here. There was no standard prepayment penalty. What the borrower ended up doing instead was they ended up prepaying 4 months of interest in the deal at the close of escrow. That way they weren't worried about debt servicing the transaction for the first 4 months, giving them time to get the business off the ground. All right, this next one is going to be in Arizona. This one's got a couple interesting things here. So first off, as I mentioned, Arizona, we do require, I should say the state of Arizona does require the loan to come from an Arizona licensed mortgage broker or mortgage banker. This loan over there was a second trust deed, and it was also owner occupied. The purpose of this loan was to be used for their trucking business. So different from the last transaction where it was a new business, this one is an already established business and they need to cash out for that reason. Some notable details on this transaction is the FICO. The FICO is 460 on this one, so far lower than the previous transaction or what banks would require in order to give them the cash. Going in second position, we were able to leave their first in place, which has a pretty competitive rate. That way they didn't need to refinance their entire loan just to get some cash out for their business. And then same as the last one, this one was also owner occupied. So assuming the majority of the funds are being used for business reasons, that's where we can come into play. Next one is Florida. So in Florida, we can do first trust deeds. We cannot do second trust deeds, as you would see from our sheet that we had up there. This one was an owner-occupied first trust deed in Miami. And this one is also for business purposes, and it was an already formed business. This one, the FICO was also quite low at 483, so far lower than what a bank would expect. So this is a situation where you have a client come to you. Again, they need cash out for their business and their FICO doesn't qualify for your typical programs. That's where we would come into play and be able to offer them the financing they need based on the value of the asset rather than the borrower's FICO or ability to repay. So this one is in Florida, and to do a loan in Florida, you would not need a special license over there. All right, and so here's the sheet if you want to take one more look. And if you have any questions, again, please do not hesitate to put them in the Q&A. This goes over the 9 states that we do lend in, also goes over whether or not you require a license in those states to send us those deals, and the general parameters on the loan to value. Also interesting is to be sure whether or not we can do junior financing in those states. A couple of them we can: California, Arizona, Colorado, Hawaii, Nevada. The rest can only do first trust deeds. So if you have any questions, please don't hesitate to put them in the chat, or obviously reach out to us afterwards, and we'd be happy to have a conversation on the phone if you have anything specific. That being said, I don't think there are any Q&A. Let's see here. Oh, I'm sorry. There was one that Chris already
Yeah,
replied to. Is
yeah.
Georgia in the horizon? It is not yet, but however, that is something we are looking at. We plan to expand into a few more states by the end of this year, and Georgia is likely one of those, but we have not solidified anything yet. So hopefully soon, and we hopefully have a couple more states open by the end of this year.
Yeah, I'd like to add just a couple of little things. First of all, please keep in mind second trust deeds are oftentimes a great way to provide your client with the best service possible. As Jeff mentioned in several of our, or at least one of our examples there, when you've got a client who's got a good rate on their existing first, and they only need a smaller amount of cash out, or it's just a loan they would prefer not to touch. Selling them a second trust deed or at a higher rate typically can be easily structured for your borrower, or the fees can be more easily justified because of the savings they would have by not having to refinance their existing loan. And then we always talk about the blended rate. What is their blended interest rate if they get to keep their first loan? The second thing I wanted to mention is how easy it is to get pricing from Jeff and myself. Typically, all you need to do is send us a property address, tell us what the purpose is for the loan, tell us how much they want to borrow. If you have an idea as to what the property's worth or what it's being purchased for, tell us that. And if you think your client might prefer a second, tell us what the balance is on the first. With that limited information, Jeff and I can take a look at the property. We can provide you with loan terms, primarily subject to an appraisal. If you happen to have an idea as to a credit score, by all means, give that to us. As you could see from Jeff's explanation of some of the loans we've closed, credit score doesn't matter per se, but you're likely to get a better rate if you've got a good credit score versus a low credit score. You won't get declined because of your credit score, but you can get a better rate. So if you happen to have that, include that in your email. With those limited number of items, we can get pricing back to you pretty quickly.
Yeah, and it looks like we had one question come in, Chris. For mobile homes, does it need to be on a permanent foundation? And can it be a single wide? And is there an age limit?
Well, first of all, mobile homes and manufactured homes are different. If it's built before 1975, it's a mobile home. We're not terribly fond of those. We're going to likely keep our loan to value at about 50% because we know how difficult it would be to get financing because they don't typically qualify for any type of FHA or conventional financing. We definitely want properties that are on a foundation. They are affixed to the foundation, whether it's a single or double wide, because we want it to be a permanent fixture on the property, so it's considered real property and not personal property. But we make loans regularly on manufactured homes. Mobile homes, not so much. Manufactured homes, pretty regularly.
That is it for the questions on our end. So if anyone else has anything, please do not hesitate to reach out, whether by phone or by email. We'd be happy to go over any specific scenarios you have.
Thank
And I
you
think
both.
that's it for
Thank you,
now.
everybody. Have a great day.
Thank you, guys.
All right. Bye
Bye-bye.
now.